Hello, and welcome to Get to Know Hedge Fund Investing, the Get to Know Hedge Fund Investing series with Carl, the Carl Investment Platform. I'm Jamie Uppenberg. Last time we talked about Olympus, the Carl Olympus strategy, which is a true tail hedger. The only thing I didn't mention about Olympus in that session was its risk profile. I really recommend looking at the year over year statistics on it, because even as an insurance, it does perform pretty well if you're looking at it as a year. And the insurance cost of it, I think it's interesting to look at how much it costs when there is a year where there is not a true downturn in the market. In the last 4 years, there was only 1 year that it truly had a negative, and it was only 2% for the year. The other 3 years it did grow. One of the years was very small, but that's interesting. I think looking at a tail hedge from that perspective is worthwhile. So now we are actually moving into Victory Peak. Victory Peak is interesting. It does have a hedge in it, but it's interesting in that it's a long short. It's looking to perform in all markets, while its overall goal is to give you an index level return, like S&P level return, with less risk. So Victory Peak is very focused on the risk side of its profile, while it still wants to give you strong returns. So when this strategy, I think, is definitely worthwhile to look at, the whole 4 years, look at that graph and see what it does and how it does it. It is not always above the index, particularly in high growth markets or strong growth markets. And you'll see that in recent times. It's a little bit below the S&P in most recent months. While if you look at the 4-year period for Victory Peak, it can perform as a strong hedge, and it hasn't quite been this below the market in a while. So it does go above, and potentially it goes above in times when you really need it. And at other times, it really hangs around the index. It does what it says. It hangs around the index with overall less risk, because if you look at its annualized volatility, worst drawdown, the recovery period, and the largest monthly loss, these are the main components of the risk profile to look at. And there, again, this is high level overview. This is not all encompassing, but it's giving you a flavor. You're going to see that it generally does better in all but one. And you have to compare that one to the others where it's doing better and all of that. We see investors in Victory Peak. Some of them are going to be those like savings and bonds and near retirement investors who are saying, I still want my money to perform. I definitely want to perform in a down market, because the rest of my portfolio would be down at that time. And that, is going to be painful, particularly for someone close to retirement. And they are looking for a strong risk profile. That's what Victory Peak is all about. So I know some folks ask, like, this isn't performing above the index right now. Why is someone in this? Well, that would be one of the reasons why. Another reason, if you're not a savings and bond investor or you're not near retirement, it's still a great diversifier in a portfolio. I mean, it's got a good hedge. It performs in a flat and bull market still. If you're looking for a fully diversified hedge fund portfolio, this is still going to lift a portfolio overall. It has utility components, or at least that's its goals. I'm not definitely don't want to say it will do anything, but those are its goals. Its goals are to lift a portfolio overall, and in a diversified model, historically, it's proven it can do that, particularly as you take on less risk and keep more capital moving. Highest levels, Victory Peak has 9 competing systems. So these systems are determining what regime the market is in. They have more regimes than, downturn, flat, and bull, but in a simple concept, you can think about it like that. What regime is the market in, and thus what investment is the best investment for the day, the moment. That's what it's doing. David Bush is out of Ohio. He is an award-winning trader and manager with 23 years of experience in the financial markets. So, he's a pro, and again, with that focus on risk, has done well within the hedge fund space. I think particularly, we talked about a true tail hedge or a long short like Victory Peak is, where you're still growing money in all markets. That's an interesting decision, right, for an investor to make. Do you want both, a little bit of both? Are you going to use Victory Peak? Is that how important is the hedge within the Victory Peak strategy to you, and how much growth do you need depending on what the utility is for this particular investment? All right, we will chat next time. Thank you so much.